Hey, this is Don, and thanks for joining me. Are you concerned that you really don't have a handle on how a lease with option to purchase works, and that maybe you need a guide as you're looking for homes as maybe a first-time tenant buyer looking for your dream home? Well, in this video, I'm going to discuss the lease with option to purchase. This will be your definitive guide for first-time buyers, or really any buyers who aren't that educated on lease purchase, those who want to transition from renting to owning. But before we begin, please look into the description, because if you want more information about lease with option to purchase, there's a link for a quick start checklist that you can download to help you get started. Now let's begin. What is a lease option? Well, lease the home now. You can move into the property you intend to buy while preparing for ownership. You are securing your right to buy. You're locking in your option to purchase later. Now remember, this is not an obligation that you have to fulfill. It's a right that you're given by the seller. The seller has to sell to you, but you don't have to buy. Prepare for approval. Use approximately 12 to 24 months to become mortgage ready while you live in your future home. Now, why do first-time home buyers choose this path? Well, there's several reasons. Now, many renters want to buy but face common challenges that keep them just out of reach. First, their credit may need improvement. Their debt-to-income ratio slightly too high. They may not have the right amount for a down savings deposit. They have limited mortgage history, and maybe their recent job or income changes. You're close, but maybe not quite close enough. Now, traditional buying requires qualification today. A lease option gives you structured time to fix what needs fixing. Here's some major advantages over traditional home buying. First, you've got price protection. You lock in today's purchase price. Now, if home values rise over a couple of years, you benefit from the appreciation, while traditional renters pay more future rental prices. You have time to become mortgage ready. You use the 12 to 24 months to improve your credit, reduce your debt, increase your income, build savings, and stabilize employment. Active preparation, not passive renting. And you have the possibility of earning rent credits. Now, some agreements credit a portion of the monthly rent toward the purchase price. Here's an example. You have a 200-month over 24 months of rent credit equaling $4,800 applied to the purchase price at the time you exercise your option. Now, sometimes rent credits can be credited toward your closing costs. And then there's psychological ownership. Moving in with intent to buy changes your mindset. You budget differently. You protect your credit, avoid debt, and maintain the home carefully. Here's month one. It's the setup phase. Take action immediately after signing your lease option agreement. First, review the contract carefully. Confirm the purchase price and expiration date. Understand maintenance and repair responsibility. Who is responsible for what? Meet with a mortgage broker right away in month 1, not month 18. Pull your credit, calculate debt to income ratio, and ask what you need for approval. Remember, you can't fix what you don't measure. Your 18-month roadmap to approval. Here, month 1 to 6 is your stabilization period. Pay down high monthly debts, reduce credit card balances under 30%. Build emergency fund, avoid new debt, car loans, or furniture financing. Month 6 to 12 is the improvement phase. Continue lowering debt to income ratio. Increase income if possible. Automate savings, track credit score progress. Serious buyers separate themselves here. Third, in months 12 to 15, pre-qualification checkpoint. Meet with the lender again. Review updated credit score, DTI, savings, and income stability. Ask, what final adjustments do I need? Month 15 to 18 plus, final preparation. Keep balances low. Avoid job changes. Avoid large, undocumented deposits. Coordinate loan application before your option expires, and structure creates confidence. You must understand before signing. Never sign blindly. Clarity builds confidence before entering any lease option agreement. Make sure you clearly understand these points. The purchase price. Know the exact locked-in price you'll pay. Option expiration date. Understand your deadline to exercise the option. Maintenance responsibility. Clarify who handles repairs and upkeep. Rent credits. Confirm if and how monthly payments apply to purchase. And then the option fee. No and upfront fees required to secure the option. And always speak with the lender early in the process to ensure you understand qualification requirements. The discipline that builds qualification. What to do? Pay down high monthly payments. Your debts. Keep credit card balances under 30%. Automate savings consistently. Track credit score. Progress monthly. Maintain stable employment and build emergency fund. Here's what to avoid. New car loans during preparation period. Furniture financing or payment plans. Job changes if possible. Large undocumented deposits. Opening new credit account lines and missing any rent payments. Remember, this isn't magic, it's structure. You prepare, you've got structure, you have discipline, and math. Breaking the rental cycle. If you're serious about transitioning from renting to owning, start by building your roadmap. Use the lease with option to period wisely to improve credit, reduce debt, and prepare for mortgage approval. The goal isn't just housing, it's ownership, and it's done intentionally. When used correctly, a lease with option to purchase transforms not quite ready into mortgage approved through structured preparation and disciplined execution. Again, please look in the description for your link to your quick start checklist. And if you found this video helpful, please like and subscribe to the channel. I'll see you in the next video.